Good afternoon, ladies and gentlemen, and welcome to the BYOTROL PLC Interim Results Investor Presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated on the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to David Traynor, CEO, Nick Hillier, CFO of BYOTROL PLC. Good afternoon.
Thank you, Paul. Good afternoon, everybody. Thanks very much for joining the call today. We're going to give you a short presentation on the results and talk a bit about the outlook for the business, and we'll endeavour to answer any questions that you pose in as much detail as we can give. Before that, I thought maybe just a big picture comment on what you're going to hear from us today, and that is right top line, the outlook for this company remains exceptionally good. All the right global trends are in our favour. From a business perspective, that's demand, supply, regulatory, all the things I've talked about frequently are still very much in place. And put very simply, there is a great deal of money to be made in these markets going forward. There is undoubtedly some short-term market challenge, much as I said there probably would be when I reported back at the year end in September time. But that is what we thought would happen as the industry comes out of peak COVID with something of a hangover. And those things that are going on are, there's a lot of activity that consumes products such as ours that is only just getting back on its feet, and that's especially the office environment. There are still too many new entrants in our market trying to make a quick buck, or actually think more to the point, trying to get out intact, having seen what's happened in the market. There's still too much product chasing far too few sales, and that's leading to all sorts of competitive pressures in our marketplace that we think is short term, but obviously creates problems right now. And just to think about what's happening in hand sanitizers, and I'm sure you're having alcohol-free hand sanitizers virtually thrown at you by retailers at the moment for free. And what's going on behind the scenes is that a lot of the big suppliers of that sort of product have been trying to offload stock at any price they can get. And when you're a company like us with hand sanitizers that are better for you on your skin than theirs, it's very difficult to get anything out of your customers when they're being offered bulk alcohol-based product for free. That's all going to work through, and the new normal will resume quite quickly. And indeed, we think the signs are already there. I'll talk more about that in a second. Hopefully, all that will come through as we go through the slides. So moving on to the slides. These are the numbers that we have just put into the marketplace. The numbers are for the half one of this year, so the numbers just reported. The second group of numbers are those for the same period last year. The third group of numbers are those for the previous year, and they neatly fall into effectively post-COVID, middle of COVID, and pre-COVID. And it's obviously the case that our numbers for this first half this year are some way down compared to numbers in the middle of the COVID pandemic. IP sales have been strong, and they're going to carry on being strong, but the numbers across the board have been down compared to that period. However, they are up against the pre-COVID period quite substantially as well. And so those arrows you see on the right-hand side are the percentage change of the change compared to like-for-like pre-COVID period. And you can see from that we are, steady upward trend on product sale, good upward trend on IP and licensing, which leads to a good upward trend in total sales generally, and obviously increasing gross profit. OPEX, we have kept quite a tight rein on during the crisis, and in fact, we're down compared to the first half of last year. But overall, we'd say the trend line is quite good. I will talk about guidance in a second in more detail, but that's the numbers so far on a comparative basis. Now, to give you a bit more colour to that, this graph shows the like-for-like sales by half year. So September 19, 2000, the first half of the year, financial year 2000, March 20 is the second half of the year, September 2021 is first half of the year, and so on and so forth. And the profile that you see there of total sales will be what many people in our industry have been experiencing. I think, if anything, the peak that we achieved relative to the competitors, relative to earlier sales, is somewhat higher. And what I would say is that the team did a really, really good job during that period, and now we're returning to the new normality, which is bigger growth than it was pre-COVID, but not as big as obviously took place during peak COVID. So the sales for the first half obviously were hit by the headwinds in competitive pressures that I talked about, but we're expecting the second half of the year to be substantially better than the first half of the year. And again, that's exactly what I said I thought would happen when we did our full year results. And the way to look at that is in terms of order book. So generally, our order book operates 2 months forward at any one time, and the order book in the first half of the year, this calendar year, was about 350 grand constantly. And it was about the same pre-COVID as well. Since October, order book has been steadily increasing to over 800 grand, which is a big increase in potential sales. Quite how much that's going to go to, we don't know yet, because it's being impacted by continued market volatility, by Omicron and other things. But everything is telling us that the market is going to improve quite a lot. And when we spoke to investors in the full year results, this is what we said would happen. And I think what, if anything, happened was the first half was a bit worse than we thought. But the second half, we think, may be a little bit better than we thought. And the guidance that you see has been a reflection of the team working through that thought process. Oh, by the way, so I've got a comment in there. Numerous IP agreements also under discussion, which is true. I think I got a question earlier on whether numerous is the same as a number of IP discussions. Yes, they're exactly the same. There is plenty of IP conversation going on. And, and true to what we said at the year-end results, the IP area has been focusing on quite a lot so far this year, because we see that product sales is going to be quite volatile. So in terms of guidance that has gone out through our brokers, I think I said at the time earlier in the year that we thought Q1 would be bad, which it was. We thought Q2 would be a bit better, which it was. Q3 would be average, and it looks as though it's getting there, and Q4 would be much better. And the guidance really we put out is our judgment on what the quantum of average and much better would be. And that changes all the time, and is really a crystal ball exercise more than actual projecting what the sales are going to be by customer. Most of our customers are wholesalers, so we respond to wholesalers' requests for product, and they're in turn responding to their customers for product. And so there's quite a lot of, I won't say Chinese whisper, but it's something relatively similar to that. So it's quite difficult to say exactly where to plant that pin for where the sales are going to come out in the year. And we decided that we were better off being cautious, given there's only 4 months of the year to go, although we're seeing a massive improvement in sales compared to the first half of the year. But behind that is a constant discussion at board level about what we are best off doing from a big picture perspective. And I would say that conversation takes two different aspects to it. The first is, we know that IP sales in the business can be volatile, both in quantum but also in timing, and that's something we've been working with for quite some time. What we didn't expect was that in current markets, product sales would turn volatile for the reasons that I said. So we were left, in terms of projecting out, trying to figure out where the volatility was going to land across our two core areas of business. So that's the first discussion, and that discussion changes all the time as market conditions change, and as our customers and wholesalers change their views about what they want to buy. So that's the first thing. The second thing, though, which is equally important, is looking at costs and how we're investing our money and where we're spending. And I think this year so far, we've probably spent over 200 grand on new leadership positions within BYOTROL that we hadn't expected, we hadn't planned to do before. And when I say 200 grand, that's on extra salary year to date, and it's on headhunter and agents fees and associated costs. We could cut costs across the business or pull back on that investment plan to support the guidance that we were putting out, or make us more confident on existing guidance. But actually, that's the wrong thing to do, because we're absolutely convinced the market is growing and we need to invest. If anything, we've been light on investment so far. And the spend so far has been on sales and marketing business development professionals who are already contributing to that increase in order book that I was talking about. I think are going to make us very successful as things settle down. So the decision at board level and the guidance was to take a bit of short-term pain in what we're going to be reporting for the year, but then expect some medium-term gain as those people start bringing success to the business. And certainly so far, the activity we've seen suggests that is the right route to go. So the other thing we've been doing is ensuring that through the cycle that we will keep the company as strong as possible, and that means ensuring that the balance sheet is in as good a position as we can possibly make it. So I'll now pass across to Nick Kelly for a little bit. Nick.
Thanks, David. So the balance sheet is pretty strong. As you can see, we have got a substantial amount of cash on the balance sheet. That's come from the previous IP deals as well as some element of destocking. Clearly, if you look at the stock position where we were at the end of the last financial year, that was exceptional. And we're building up a position, as we've talked about before, in terms of the trade receivables. Now, they are a combination of the receivables coming from product sales as well as the IP deals. We haven't split them out in the interims. We do split them out in the finals, but you can assume that broadly speaking, there is the same sort of mix. And clearly, we probably won't put that line on there anymore, but we haven't had any borrowings for a while, given the strength of the performance during the previous financial year. We repaid all the borrowings and have no intentional or indeed need at the present time to take on any more borrowings. So you can see how the balance sheet as of the interim close is strong, and we have a very strong cash position looking forward, again coming from the previous IP sale or license agreements. You can see we put down there, we've got round numbers about £1 million coming in over the next couple of years from that. So that gives us a strong position, as David says, to continue to reinvest where appropriate in the business. That's it on the balance sheet. If anyone's got any questions, put it up on the chat and I'll do my best to answer them as we go. David, back to you.
Thanks very much, Nick. Sorry, struggling with the mute button. Thanks very much. So in terms of the key themes that we're seeing going on in the first 6 months, I've talked a bit about market demand being volatile, but all the long-term industry trends remaining in our favour. And I've talked about the impact of extended lockdowns and overstocking and so on and so forth. A particularly difficult market has been hand hygiene for the reasons I've always talked about. The strategic initiatives that we've been talking about publicly are all going very, very nicely. So I thought I'd pause a bit on that. I'll spend a bit of time on that now. So first of all, Solvay. We are aware of 4 launches now of Solvay Actizone outside the US under third-party brands. I'm not allowed, due to confidentiality, to say who they are unless I get a specific approval from Solvay. But none of those 4 launches will have Actizone or Solvay on pack, so I can't talk publicly about it. I understand that the chief executive of Solvay, the chief executive of Reckitt Benckiser, were in a conference where they were talking about Actizone. And so I suspect strongly that Reckitt Benckiser is one of those companies which is the biggest hygiene brand and company in the world in consumer products. And I understand they've launched in France and Germany now, but it is fairly early days. But the quality of that sort of execution, I think, is very encouraging for both Solvay and for us, if that is indeed the case. There's also a couple of big launches taking place in Asia, and they are slow starters, but I think they are going to do well as well. But the big change is that Solvay now has received approval from the EPA in the States to make long-lasting germ kill claims in the US domestic market. You need to pass some very stringent tests to do that, and we believe the only companies that can do that right now are ourselves with an old formulation of BYOTROL, Procter & Gamble stroke Microban, and now Solvay. And that is very helpful to Solvay's marketing efforts domestically in the States, but even more helpful to its marketing and sales effort globally, because they will be the only company who can supply a globally approved formulation under all the various regulatory systems to global players, which is exactly what the global players are after. Simplifies supply chain, increases economies of scale. So Solvay now have to get individual state approval for the products domestically in the States, but the hard bit, getting through the EPA has now been completed, and I think it's a very big step for them and for us. State registrations take between 3 and 6 months, and so I'm expecting to see some US launches in Canada 2022. I'm expecting Solvay to see some sales before then. We have not reported any royalty or commission income from Solvay so far because the numbers that they have been achieving have been relatively small. The next time we're due to ask them for their progress is the end of December, so I'm expecting to see some evidence of royalty from Solvay within this financial year, and I am hoping it will be material, and certainly the signs seem really quite good. So Solvay is making really good progress, and we're delighted to see the progress that they're making, and we think we're going to benefit from it. That's the first point. Secondly, the sale of BYOTROL 24 to Integrated Resources was something we have been looking at for some time, because effectively we've been backing 2 horses in the US domestic market with similar claims, although a slightly different formulation and slightly different format. So what we've managed to do is to maintain our strong relationship with Integrated Resources, give them much more control over what they're doing today, day to day, generating some cash from the business, but also within terms of the documentation that we have, generating some upside as and when they are successful. So I think it's a quite nice combination of backing a global player Solvay and having an interest in the US version of it without getting in any way conflicted. And then thirdly, seaweed technical work is now reached a conclusion, and the work has been on the mode of action. It's very difficult to pick up commercial agreements with customers and partners that are actually understanding how your product works at absolutely micro and nano level. And what we're seeing is actually very good, and we think a unique form of virucidal product, and we think it has good stretch into our core areas, but more important to other areas as well, where we'll need partners of the type that you'd recognise operating in animal foodstuffs and that sort of area, where we think the claims will be valued and whether they'll generate a decent return for us and our partners. TriStar has only just launched our version of Cash, their product that surface care for hospitals. So I don't have any particular feedback on that. It's too early to say how that's going to go. But I understand the launch has now taken place and is progressing to plan. So all initiatives that we are investing time and effort are going quite well and making progress. And the other thing we've been doing is making some very steady investment improvements to the team, as I touched on earlier. So we have effectively 6 operating units within BYOTROL, covering finance, technical, supply chain, professional products, consumer products, and business development. And we have changed 4 of 6 of those leaders in those positions. And of course, accepting present company, I think we've upgraded in all of those positions. And the 2 key hires are in sales and marketing leadership, with one chap, Mark Kite, ex-Gojo and Diversi, exactly in our space, senior salesman. And the second chap, James Mills, who ran Zuno in the UK and built it from nothing to a decent sized business in long-lasting germ kill, very high quality business development person. We have a full-time CFO to be announced imminently, who I think make a big difference, given that he'll be able to contribute 100% of his time to our business. And I think they're going to make a big difference. We're also increasing investment across the business in sales and marketing generally, and we're expecting to add 10% in annual cost base over time. It's the right thing to do, and it has had an impact on the guidance we put out, but it's absolutely the right thing to do. And I think it's going to lead us to be a stronger company overall. Interesting enough, I frequently get asked about our sales and marketing spend and why aren't we doing more? And my answer is always, this is to investors in particular, how much of our EBITDA would you be prepared for us to give up, given it takes time to pay back? And the answer so far has 100% been no. So what we've done is decided we need to invest more. We need to get some stronger people on board. We've gone ahead and done that, and that's going to take a little bit of time to pay back. So in terms of outlook for the business, you may remember this slide from last time that I was on IMC. And I think at the time I said that the trends are very much in our favour, and that pre-COVID infection prevention markets were growing about 5% per year, and that post-COVID we think it's going to be around about 10%. But the earnings of the incumbents would like to increase at a higher rate than that because the non-regulatory approved chemistries are going to disappear, and some of the quick buck making of some of the new entrants is going to disappear also. Now, those numbers seem to be the ones being very much followed by the bigger players in our industry like Ecolab and Diversey and others. And if you look at their performance over the cycle, you take away the peak COVID period, they are flat to slightly up in terms of sales, but nicely up in terms of earnings and EBITDA over the period. And I think the Trusted, I think, according to my sort of rough calculations, about 25% up on both things across the cycle. So actually, in comparative terms, we're doing quite well, although I realise the first half wasn't as good as we had all hoped. There still are multiple opportunities to increase market share and accelerate growth further, which is why we're investing so hard in sales and marketing. And we're still seeing plenty of industry consolidation taking place that suggests there's some smart money following this industry and is continuing to follow it. So, for instance, I saw that Lonza Specialty Chemicals, which is one of the people we talk to in our industry, and you could argue our competitors in some respects, have also just been bought as well and relaunched. So our view is very much that the outlook is very positive, although there's some short-term challenge on sales, as I have already talked about. So the outlook in terms of what we're going to do as a business actually is also still pretty similar to where it was when we last spoke, and that is that with the volatility in product sales, we're going to carry on focusing on IP monetization, and we are working on several opportunities right now, and that is likely to lead to the big leap in EBITDA that we've been talking about via our brokers. We're going to carry on increasing investment in product sales, mostly in marketing. It won't be marketing and sales that you're going to see on the TV or that you're going to read about in newspapers. It'll be more the nuts and bolts marketing. So marketing into journals and online to veterinary premises and so on, and advertising in Crane Weekly and other similar publications. But it is the hard yards to generate product sales in mostly professional markets, which is where most of our resources currently are. The new team has made an excellent start so far, and I'm hoping they're going to carry on doing well as well. We're carrying on with the trend in focusing on fewer segments with fewer core technologies. We're making really good progress on that. I'm not quite ready to talk about what all that means for us in terms of public positioning, but we'll be doing that in the new year. And anything that we don't view as being the absolute core part of our business, we will carry on looking for licenses and alliances as we have been so far, and doing some limited monetization of non-core technologies as we did with BYOTROL 24. We're now accelerating the integration of Medimark as well. So we are seeing some reduction in costs. We're seeing some improvement in systems. We're starting to see some synergies coming through, and we haven't really accounted for that in our guidance so far. And there will always be potential bolt-on acquisitions that could accelerate growth that we will get shown. We're not interested in anything at the moment, and I think it's unlikely that we do something, but there's always a chance that something may come up that fits very nicely. That's just the way the market is right now. So that's what I was going to say for the time being. There are loads of questions coming through, which we'll answer as fully as we can. I've got a couple of extra slides that we can refer to, depending on what questions we get. What I just wanted to say, before we get on to the questions, is that I urge you to look behind the headlines in the results that you've seen and have a look at the detail of what we're saying. And I think when you do that, you'll see that the changes that we've been announcing today are all logical. And actually, we're in a really, really good, strong position to grow. And much of what we're doing right now is positioning ourselves in the most efficient way we possibly can to take full advantage.
That's fantastic. David, Nick, thank you indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I'd like to remind you that recording the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you'll be redirected to the opportunity to provide your feedback in order the company can better understand your views and expectations. David, Nick, if I may just hand back to you, you've had a number of questions come through during the meeting. Just to click on that Q&A tab and start at the top and just read out the question where appropriate to do so. Thank you.
Okay, Graham W. From the FinCap forecast, you appear to be guiding to 1 million of adjusted EBITDA in half two. What makes you confident that this is reasonable in the absence of a new major IP deal? Well, and I think we're putting into, or FinCap putting into the guidance, 250 grand of royalty income from Solvay before year end, and that's just that's a guesstimate from both of us based on what we're seeing so far. We are hoping that the product sales will benefit from Omicron and that we will exceed on that. But there are several IP discussions that we have, and as a board, we're not allowed to put out projections without a reasonable analysis of the deals that we're looking at and the likelihood of success. And our view is that there's quite a lot to come in before year end. What I would say is that if I have a potential license deal that's going to generate £200,000 into P&L in this financial year, there's no point me applying a 50% probability to it and saying that it's going to come in at 100. The truth is, it's binary. It'll either come in at 200 or it won't come in at all, which is where the volatility to the IP agreements come in, as I was talking about before. But our guesstimate, it is a guesstimate, is that combination of product sale and an IP will come in and give us a much better second half than we had in the first half. We've been quite good at getting IP deals in the past, and so I think there will certainly be a boost. Quite how big the boost is, that remains to be seen, and we'll update the market as things change. Graham W. Solvay said it made first sales in Germany and Asia Pacific in November 2020, and the WIS24 products have been on sale all this year. Why do we not see royalty coming through in the H1 results? That's because the sales are quite small so far. Solvay has always said that the big sales will come in once the US EPA registration is received and once global companies start buying globally. We will probably get some benefit from Asia and from Germany and France before year end. But not sure on the quantum yet, and there's no point putting a guesstimate in there for the half year. Graham again. Gross profit on product sales was a long way short of covering operating costs in the first half. Do you see this as one-off? Well, I think the market conditions for the first half are a one-off. They're highly unusual. I mean, it was an exceptional year last year. It's been an extraordinary year so far this year. The pattern, though, of demand and sales has been pretty much as we thought it would be, although the quantum has been slightly different. So yes, I do see it as a one-off, and we wouldn't be making such confident projections for the second half unless we genuinely believe that was going to be the case. Andrew C. Could you please comment on what, if any, the product difference is between BYOTROL and Solvay's long-lasting product that you helped develop? Also, will there be long-term royalties from BYOTROL or just short-term now following the sale? Thanks. The difference is the BYOTROL and Solvay's Actizone work in very similar ways. BYOTROL is based on first-generation Solvay polymer, on which we did some extra work and generated some extra claims. So when we sell, okay, right. So I'm going to start again. I misread the question. There are three different products, long-lasting claims. One is BYOTROL, which is a formulation that BYOTROL developed based on an ingredient called PHMB, a polymer, many, many years ago, that we then sold the rights to Integrated Resources on. It works very effectively, but it is based on a chemical ingredient that is not popular in the European Union. Solvay's long-lasting product, called Actizone, is based on a chemistry that has similar claims to BYOTROL 24, but is acceptable both in the States and the European Union, so it has global potential. BYOTROL has a version of Solvay's Actizone that's based on an earlier iteration of a Solvay polymer that has extra claims. So there are in fact 3 long-lasting products, long-lasting germ kill products that originate from BYOTROL or operate through BYOTROL that all have different chemistries or make similar claims in certain markets, but are differentiated by geography or differentiated by some degree of format as well. Will there be long-term royalties to BYOTROL 24 or just short-term now following the sale? Royalties will be short-term in Integrated Resources' current markets. If they do deals of a certain type with certain customers that we've named with them, those royalties will be extended and will be increased slightly. And we are helping Integrated in its conversations with those type of customers, so we get the benefits of the work that we do. If Integrated then on-sell the formulation to a third party, we will receive some of that upside as well, depending on what price is paid. So I feel we've got a nice combination of working alongside them and constructively with them without getting in their way, without getting in the way of Solvay, but also benefiting from any success that they have. I hope that's clear. Please email me if we need to go through that again. Duncan R, what are you going to do with the cash you have? Well, at the moment we're investing in new people and sales and marketing. Well, so the first thing I think to have a decent sum of cash in the business is helpful, particularly as I think the economies may get a little bit difficult next year. Secondly, we're taking some of the cash and investing in sales and marketing and in research and development, because I think we need to keep the research and development pipeline going on a regular basis. And thirdly, we may be investing in alliances and partnerships with third parties as well, where there has to be some upfront investment. Nothing big. I think we are being relatively conservative and cautious. I think that's the right thing to do at the moment. Duncan, Nick, this is one for you. When is the 1.4 million cash to the US still coming through staging? How much already taken? When you say potentially higher revenue-based payments described as significant, how much?
Okay, well, I'll answer the first of those. I don't think we can sensibly answer the second part of that. But in terms of the staging, 1.4 million, it's in dollars, so obviously you have to convert it back to sterling to match up the numbers in the accounts. Roughly speaking, two-thirds of it is deferred payments. So the first chunk of that has either been received prior to the period end or will be received shortly in cash. The others are deferred over 2 years. So that's how it's staged. And in terms of how it's been recognised in the P&L, the £750,000 that you can see in there, which is fairly obvious because it's the only revenue from North America, is around £1 million of gross value attaching to that contract, less £250,000 relating to the previous year's deal, which obviously we had to offset. You can't double count it because it's all part of the same series of transactions, if you like. So that £750,000 is the current year value of that transaction. But in terms of cash, the majority of it is still to come over the next couple of years. David, I don't know if you wanted to add anything for the second part, but I'm not sure we can sensibly answer that.
This is actually our own base payments. Well, yes, that comes back to, so if Integrated do either sell on the formulation to third party, or they end up with sub-licenses or deals with a couple of named companies who we're working with them on, they will pay us some of the upside that they achieve from it. We're not allowed to tell you how much or who they'll be due to confidentiality reasons, but we have tried to do a combination of getting upfront value for passing across the ownership, obviously reduce our risk because we don't have to pay the costs on registration, either the States or the EPA anymore, but actually sort of make money alongside them when they're successful. So I can't put a number on it yet, but I think it's comes back to my comments last year about optionality and planting lots of seeds and helping the flowers of the garden to grow as high as possible, and then reaping when they come through. But I can't always tell which seeds are going to result in decent flowers. But obviously we wouldn't do it unless we thought there's money to be made. And you see, what has the underlying progress been like in the NHS for alcohol-free hand sanitisers? Oh, that's a good question. That comes back to some of the Ian Duncan Smith thing that you've probably seen in the press as well. I mean, we've been stated that we're 92% of the alcohol-free hand sanitisers into the NHS, and we probably are about that number, sold through the SC Johnson brand. We don't have a direct sale channel into the NHS anymore, but it's quite a small number. And the reason it's quite a small number is because the regulators in the UK and politicians during COVID kept on talking about alcohol-based hand sanitisers as being the only chemistry that worked. Complete and total rubbish, but somehow that message seemed to get through and got repeated over and over again. So in SC Johnson's sales to hospitals, quite often they come across the comment from purchasers and nurses, but isn't the only thing that works alcohol. And it's very difficult to argue against that because there was not much publicity to support it. So in talking to Ian Duncan Smith, who's an advisor to the company, we were explaining the issue with this and saying the truth is that many chemistries work against COVID and viruses on skin. It's quite hard to get it to work effectively and be good for your skin, but one of those combinations we have, and we would like to find a way to get the government to recognise that. Ian was sitting as chairman of the working party that is looking at Brexit, regulation post-Brexit in the UK, and that's split into two: services and then industry. And he informed us that there's representations being made to the industry portion of the working party, saying from another company, saying that the situation on government commentary on alcohol-free hand sanitisers was ridiculous, and please can they change it? And there are representations, if it's a cross-party group of MPs, all wrote to the working party saying you've got to change this, you've got to look at it. So that led to recommendations to the working party, of which Ian was chairman, and of course was aware of it, to say alcohol-free hand sanitisers should be treated on level playing field with alcohol if they pass the right regulatory tests. That's all that was said, and actually is the right thing to do. The problem we had was that didn't come through until after peak COVID had gone, and most of the sales into the NHS had already tailed off and the overstocking situation had come into play. So that's a long way of saying that I think the situation for alcohol-free hand sanitizer in the NHS is going to improve radically once the overstocking has changed. I think that will feed through to sales elsewhere as well, because the NHS will be using it, and I hope very much that will be a beneficiary. And I felt a bit sorry for Ian being challenged around conflicts of interest and sleaze. It was completely ridiculous. He was just doing the right thing. And in fact, all he was doing was sitting as chairman of the working party, within which a subgroup was making the recommendations that we were after, that were being recommended by third parties. So I think the prognosis is quite good. It'll take a while to work through, but I think we're going to do much, much better than we have historically over the coming years. William H. Thank you, William. Will the seaweed research result in new categories of product or just different improved versions of existing products? Any colour you can add on the use and timing of the seaweed research would be helpful. Okay, good question. Thank you. We didn't really understand how we were getting the results. I'll phrase that. We understood the results that we were getting. We didn't understand what the mode of action was behind that, which is why we organised the academic research behind it at the University of Liverpool to find out what was going on, supported by a UK Innovate government grant. And we are coming to a conclusion on that, and it looks very interesting to us. It looks as though there's something that we are doing to the viruses that are preventing them attaching to the cells, and then they're just passing through the system. Now, it means that we think we have potential natural sustainable claims for our existing products in a variety of formats. But actually, I think the truth is more money is going to be made outside of our core area, because we think people will pay more money. When I say people, I mean customers and research organisations and B2B companies and so on and so forth, will pay a higher margin for the sort of claims that we can bring through the seaweed than we will necessarily get through our own products. So, for instance, can you put it into an animal foodstuff that goes into the animals that helps with reducing viral load in their systems and makes them grow faster, maybe, or be healthier or happier, or whatever, but doesn't damage those animals because the seaweed product that we have does not kill any of the bacteria, including any of the good bacteria. So what we're trying to do is to find out exactly how it works, which I think we're getting to the end of. And now we're starting the commercialization cycle to see who would be interested in it and at what price. In parallel with that, we're looking at supply chain. So can we get the product, can we get the ingredients that we want in the size that we want? And can we get them at a price that we think is good? And what are the benefits of economies of scale? But it still remains very exciting. I think it is a medium to long-term prospect in terms of money, but I'd hope we get some news flow quite soon that you better factor into evaluation analyses later on. Jonathan H, another question on royalty income and projections for it. I've already answered that. And then another question on Ian Duncan Smith that I think I have answered. I mean, there's this is from DE. I talked about his role in the hand sanitizers that was helpful to us, but is not in any way conflicting with his responsibilities as an MP. Question, why did the board of directors think and agree that his employment was necessary, and exactly what did he do for the company? Well, Ian was a non-exec director of BYOTROL many moons ago, before I took over the seat. He was quite effective at the board, I understand. It was quite helpful, just giving general advice on business and making introductions where it was appropriate. Ian's wife runs a charity that develops dogs to sniff out disease in human beings, medical detection dogs, I think they're called, and we started supporting them as a charity. So they have an interest in the space. And we thought that with the UK leaving the European Union, a potential change in regulation, it would be good to have some sort of tentacles into the government to actually try and understand what was going on, or at least have translated to us what we thought was going on. And that seemed to be a very sensible hire for the business. He's a really good guy. I think he's been very helpful so far. And I think the recent publicity has been unhelpful and rather unfair as well to him and to us. But not a lot we can do about it. If we were going to respond publicly to the incoming calls that we were getting, that just would have fed the cycle, the news cycle, which I didn't see any point in doing. And indeed, that seems to now have gone away, particularly with respect to Ian. Graham Watson, on the IRR sale, you're talking about a preliminary three-way agreement with a significant distributor. When might this become a definitive agreement, or is it already? Well, look, we're not allowed to talk. When you deal with bigger companies, you are tied up in extraordinarily detailed non-disclosure agreements that we do not want to in any way get in the way of or fall foul of. So the very fact that we put a comment in the announcement that there was a discussion taking place should tell you that there's something that could be material for the business. We have to say something, and the weasel words that we used, and I'll phrase that, the generic words that we used were there to try and not fall foul of any NDAs. We are working on something that will benefit Integrated Resources and us, but whether or not it's going to happen, I really don't know. One of the issues with having a bigger chunk of IP revenue in our projections is it's very difficult to time those deals. And if the people we're talking to understand that we're working to certain deadlines, then they use the time to their benefit. So it's a tricky thing to get right. But there are some very interesting conversations taking place with BYOTROL 24 in the States that we will benefit from. We're not putting anything in our projections for it yet, but as soon as we can say something about it, we will do publicly, of course. James P, are you and fellow management looking to reinvest in BYOTROL stock? As an independent shareholder, I feel let down by group share sales above 7p. but would feel reassured with purchases at this level. Well, management already sort of quite heavily invested in BYOTROL stock, and we believe in what we're doing, and we just look at the company on an individual basis all the time. Let's see. I don't know. It's difficult for you to feel down. I think. Sorry if you feel let down by things, but I was once at a Rio Tinto presentation where an analyst asked the chief executive why they weren't hedging out the copper price, and the chief executive said, "Because we're a copper company. If you don't believe in copper, don't invest." And there's a little bit of that going on here. The short-term sales price, I think, is linked to what's happening in the market, and I think is ignoring what the long-term potential is right now and how far we've come. If you don't believe in that long-term potential, then you shouldn't be here. If you do, I think that share price number is something that you may well in the future feel good about. But I find myself getting drawn into share price conversation now, which I really shouldn't do.
And on that note, David, you've actually, both you and Nick, and thank you very much, you've covered every single question we've had through from investors. And of course, if there are any further questions that do come through, the team will have the ability to review those, and we'll publish those responses back out on the Investor Meet Company platform where appropriate to do so. David, perhaps just before we redirect the attendees to give you some feedback, just a closing snapshot before we do, please.
Yes, okay. Well, look, I want, if possible, people to keep looking at the long-term outlook for the business. I've tried to explain why the short-term has been a bit tougher than we expected, but I think if you look at our competitors in the market, you'll see that the way we position things is very understandable and logical. We're investing quite hard for the future right now, but we're doing so cautiously as well. I think the long-term prognosis and the medium-term prognosis is really, really strong. So thank you for your continued interest, and I hope that continued interest will stay in place for the long term too.
That's fantastic, David. Nick, thank you again for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of BYOTROL PLC, we'd like to thank you for attending today's presentation. That now concludes today's session. Thank you and good afternoon to you all.